Okay, guys, good morning to all of you. All right. Okay. Morning. Merry Christmas, guys. Merry Christmas. Come on, guys, everybody. If you're online right now, please type Merry Christmas to all. Yeah, today is the Christmas Eve, and I think this is a good time for all of us to be around to enjoy and appreciate that life. Right? The last 2 years, the market have been pretty crazy. We had one of the craziest sell-off in 2020. The market was so badly down by almost down like 38%, and almost incredibly it rebounded. And the rebound itself is even phenomenal. It went up more than 100%. All right. So this is really a crazy period. And of course, undeniable, this is a great time for us to get involved in the market. Oh, Benedict, good to see you. All right, in the morning. Okay, I might take a little break. I'm sure you're doing that, yeah? Now, today, this segment itself is going to be very different. It's a special edition because we are not able to see charts, right? Because today is a holiday. So we will not talk about the markets, but we're going to concentrate a lot of some alternate market views, some news that you don't find in mainstream media. Yeah, okay, so let's just do me a favor, share this link right now. I'm sure many people is at home now, right now, doing nothing. Share this with your friends. Let them know that there are more things in the market, and of course, prepare. Now, of course, during the time when I'm going through that portion, I'll bring you through a roller coaster ride. Okay, you'll be like, oh, on the way up, then bring you all the way down, and bring you all the way up again. So your emotions will be played around with, and I hope that you enjoy this session. Okay. All right, with that itself, let's continue and do our morning MAO right now, special edition. All right, today is the 24th of December, 2021, Friday. All right, thank God it's Friday. I love Friday. Okay, today is a very special day. All right, now it's special because it's Christmas Eve, but it's not very nice for people in Xi'an. All right, you know where Xi'an is? Xi'an is famous for one major tourist attraction. Anybody can tell me now, what is it well known for? Xi'an is actually famous for what? Okay, for those who frequent China or very good with the geography, or you know your history very well, tell me, what is Xi'an famous for, especially for tourist attraction? Please key it right now. Whoa! Wow! Kelza is so fast. All right. Yes, indeed. It's a terracotta. Wow. Okay. Bing Ma Yong, correct, exactly. Okay, because of that, and it's Christmas Eve, I'm gonna give you 2.88 ADA coin, okay? All right, well done, Kelza. Okay, yes, indeed. All right, okay, you've been there, fantastic. All right, it's a very famous place. Okay, told me you came a little bit late behind Kelza, so don't worry about that. Okay, so indeed itself, right, Xi'an is down. Yes, it's actually down. Yes, in fact, it is down because they actually, what has happening right now is that the Fengchen, meaning that they actually do a shutdown. Okay, 1 minute, yeah. Let me just get my charger up for 1 minute. Now, meanwhile, while we're waiting for all of you guys, do understand this, guys, do me a little favor, contact your friends, tell your friends all to come down and listen to today's session. It's really incredible. Today's session is really no joke. It's pretty good, yeah? Okay. Really very good session. Trust me on this. Okay, let me just also share to my friends right now today's session. Okay, today's session is really very good. Get your friends coming to listen. It's really good. I give blast everywhere. Now, Xi'an is down. Do you know that this is the downside is other than basically it's like, oh, okay, but you know that the crazy part is this, okay? The crazy part is down on the 23rd of December. That's 23 months after Wuhan was down. But do you know that Wuhan was also down on the 23rd itself, January? Oh my goodness, it's mind-blowing numbers. 23, of course, 23 is one of my favorite numbers because it's Michael Jordan's number, right? But the crazy part is this. I mean that, wow, okay, 23. So 23rd of December, shut down after 23 months from Wuhan, 23rd of January. And of course, the way it shut down is really incredible. So I'll show you to you later. Yeah, you will be shocked because some of the things that I got from the upstream media itself, right, it's going to be pretty interesting. Yeah. Okay, so before we go into that itself, once again, do note this is the my job is to not just entertain you. Your job is to actually listen to what I offer. Now, because today there's no charts, once again, I'll repeat myself one more time. Hence, therefore, it's more of understanding certain part of the market condition, the sentiment, the momentum, and then you make your final decision when you start trading on Monday once again. Now, before we go into that detail, take with the boys, okay? Traders Academy wishes all of you Merry Christmas, and of course, we will not wish you Happy New Year yet because why? We're still gonna have MAO until then. So we wish you a Merry Christmas for today. All right. Hopefully you have a good time today. Spend a good time with your loved ones. You never know that things can happen anytime. So please love them as much as you can. Now, of course, Christmas will have two different views or two different camps. Now, the bull camp, okay, look at it. Their Christmas is full of abundance, lots of gift, spending money, anything and everything. All right, they are definitely happy people. Yeah, very, very happy people. But of course, the thing is this: for the bears, it doesn't seem to be the same. It's like if there's okay, you can see the bears are lean, they're tired, they have no money, and of course, Christmas wasn't fantastic for them. Now, in 2018, the bears were very happy because the market was down for more than 10 days in a row. And of course, the bears were enjoying themselves, okay? But of course, time passed, 2021, it doesn't seem to be the same way. And of course, why is that so? You must understand, I've been saying this for the longest of time. Since the inception of Dow Jones since 1896 until today, this is like 130 years, okay? Do note that the market prefer to buy at any one time. So you can see that since 1970, okay, that means the last 50 years, okay? Now, when the market really rally, it usually stretches for at least 7 years, And of course, the rally can be easily more than 100 to even as high as 400%. So Reagan time in 1982 to 1987, about 5 years, up by 229. Now, the key point is this Reagan time. Hey, this is my birthday, by the way. My birth date, birth month, and almost my birth year, okay? Now, the great expansion period back in 1990, this is where the Bill Clinton, come to the picture itself, 417%. Oh my goodness, okay? And of course, the pre-GFC global financial crisis, that was in 2002, 2002, and to 2007 for 5 years again. And that was where the market up by 100%. So now is the post-GFC, means after Lehman Brothers time until today, from 2009 to today, is up by 323%. So in short itself, right, look at it. Basically, every 10 years, at least 5 to 7 years belong to the bull. And about only 1 year to 2 years belong to the bears. And about 1 year itself belongs to the consolidated period. So don't you realize that being a bull is better than a bear overall? And that's why I'm saying this, guys. If there's going to be any pullback in the near period, let's say the market pullback for like 10 to 25% down from where we are right now. Okay, example, yeah, not implying anything. Then remember, short as much as you can because you need all the abundance of equity, balance all your ammunition ready for the bull. And then from there on, stick to bull. Every pullback just buy. Don't short the market and let it run all the way because this is the statistics and it will not change at least for the next 10 years, okay? So that's the reason why I am very optimistic and preparing what I need to do next 10 years. As long as you follow us, I'm pretty sure you guys are going to profit from there. So remember what I say again, stay bullish in the market after a good pullback comes in, okay? Yep. Now, of course, yesterday I didn't have a chance to show you much charting and I was doing recording, so I can't do my annotation. So anyway, just to show to you yesterday, I mentioned that crude oil will be able to go higher. I mentioned that crude oil was at $72.83. I said that crude oil should be able to go higher. And of course, you can see that down to the wordings, of course, it's not as the translation, the subtitle is not actually really correct, but you should know that what I meant. I expect it to go to $74.74, and that was my expectation. And of course, what did the market do? The market really did it. The market really bottomed out at the price of where we were yesterday. And then after that, the crude oil just shoot up all the way to almost to $74. Yeah. So again, I was pretty spot on for my crude oil. Now, why was that spot on? Because I was looking at my KSI pretty clear, right? Now, many traders are saying that the crude oil won't go higher, but look at our KSI on the day chart. It's pretty clear that the KSI is green and it's uptick. So generally speaking, we know that if the crude oil goes higher, it will go up pretty high. All right, so it was a pretty good spot on call for crude oil. Thank you, Judy, for giving me the spot on call. Yeah, thank you very much. Yes, crude oil, spot on. Come on, guys, right in, crude oil, spot on. If you were listening to me, definitely I was telling you about crude oil yesterday. Now, of course, the one that really takes home was the gold. Right? Gold was trading at 1804.05. Okay, and I mentioned that if gold is to go up, it will have to go past 1806 first, then it will go towards 1809. Okay, pretty clear, right? Yes, indeed, that was what's happening. And of course, what happened, guys? Take a look. Crude oil, gold basically came down. The gold came down first. Then it couldn't go down below 1799. Then notice that the KSI jump was already there. So traditional indicator, when the market was coming down, naturally they call for sell, but not our indicator. Look at it. Our indicator shows green, and the green was actually surging higher as the price was coming down. Now, no indicator in the world can perform something like this unless you purposely create like an inverse indicator. But of course, does it make sense? It doesn't make sense, right? So for us itself, we know what's happening. Hence, therefore, when the price came down almost instantaneously, the gold recovered and the gold went all the way up to hit my target at 109.55. Look at it. How amazing is this? This is really very good trading, right? So gold was even much better, right? Spot on, yeah, for gold, correct. My gold was spot on once again. Oh, come on, man, give me your spot on command. Okay, thank you very much, guys. Now, some people ask me, Cal, between gold and Dow Jones and NASDAQ and S&P 500, which one is my personal favorite? Now, my personal favorite is still gold. Yeah, undeniable. My personal favorite is still gold. I think that for me, gold trading has been pretty decent for me. Yeah. So that's why I always tell people this. If you want to listen to Cal, listen to my gold analysis, you should be pretty okay. Yes. Kalsa, gold bling bling. Thank you very much, guys. Really appreciate that, everybody here this morning. I know that you could have spent time to listen to, to watch some Netflix, but I tell you this is worth it. Yeah? Okay. All right, with that itself, right, let's take a look. Let's guess this. Yesterday, I asked you to guess the initial jobless claims, and the winner will get 16.88 ADA coin. And then, of course, you guys were very solid. You guys went on and listened to my this recording, and y'all give your views and your so-called guess. So apparently it's all right. Okay, y'all guys are pretty near. Okay, but of course there's can only be one winner. And the thing is this: the number was 205, but the nearest guy was actually Siu Kaiman and also Stanley Chan. But of course, Stanley Chan was even nearer. But because it missed that number by one, so cannot give. So sorry, Stanley. So you did not get to win. You're almost there, really almost there. Now, really, seriously, the first time I see the forecast and the actual come out exactly the same. Wow, okay. So because there's no winners, then what we have to do, we will snowball this to 19.88 ADA coin. Yay, we are going to do that. So you're going to have it going to be 19.88 ADA coin next time. All right. Well, thank you guys for participating. We are almost there. But like I said again, we are looking for exact figures. So if it's just even on a one, we still have to snowball it. Okay. All right. Now, last night, the Dow Jones was really, I can say this, all expected. I tell you that the Dow will likely be going higher as long as it stays above OP. And of course, it did that. Of course, the market trading was very light, and the trading volume was thin. But then again, this is what they are trying to do, to push to make sure that the numbers looks good. Yeah. So S&P 500 closes at a record following 3-day rebound from the Omicron sell-off. Don't remember this. When the boys want to buy something, they'll tell you everything in the world that's negative. Okay, and they buy and buy and buy. And when they have purchased it already, right, they will just do another part of it, which is just push the price higher And then after that, when the price is up, then they tell you, oh, okay, is that everything? Yep. So what happened, guys? Let's take a look. You can see very clearly that the major all went up for the third day in a row. And you can see that the S&P 500 now is heavily resisted at this major top here itself. And this major top is 4,700. So everybody's betting that the moment the major top cross, the high could be as high as 4,750. Yep. Okay, so on one side, I do believe that there's a very good chance that 4,750 can be seen, yeah, in the next few days. Okay, there's a high chance because everybody's gearing towards it. On the flip side, if everybody is on that target, then be careful, because if the market loses, okay, how much? If the market loses 46.75, then there will be a bit of trouble. Yeah. So just take note of that. 47.00 is a target that everybody wants it to cross. Okay. And of course, if you cross, the first target will be 47.50. So there's 50 points for you. It means that Dow Jones will get at least 400 points. On the contrary, if the market loses 46.75, that will bring the market all the way down, and this time can be all the way down to 4,500, because everybody is all expecting the price to go higher. So take note of that. This is my first target view. All right. And of course, what's the reason? You can see that the share, although it's a light volume trading, but Microsoft, NVIDIA all went up. And of course, Jim Paulson, this guy has been very bullish. He says that this is going to be the important Santa Claus rally. So Santa Claus rally usually means that it's actually post-Christmas to the first 2 days of the new year. So now people are buying in anticipation already. And of course, the reason is Omicron. The new study said that Omicron has a lower risk of hospitalization than other COVID variant. Okay, that's cool. And of course, FDA has came in to grant the emergency use of the COVID pills from Pfizer. But some people can't take jabs, right? So this is the best thing to have. So because of all this itself, right, all the opening play, airlines and hospitality all went up yesterday. Yep. So it's pretty good. So let's take a quick review of what happened yesterday. As you can see on your chart screen right now, the market opens between the two pivots, but the KSI is green. So we know that if it goes up, it will naturally go towards 35,952. And when you reach there itself, if the market go higher, okay, because why? MLP, MA30, MA200, all below it. So that's why the market is pretty bullish. So once the market stays up above pivot one, then it naturally will go higher, right? Yeah, it did. Okay, so let's take a look what happened yesterday. So you can see that the market was really not moving until afternoon session, whereby you can see that the zebra is there, and then the market turns around from KSI red to green, means the seller became buyer, and that was the first indication. And of course, what happened is there were two stars trying to make them up. Then of course, initially the market went down. Then after that, as you can see very clearly, the boys came in to buy before the market shoot up. So the boys came to buy, and then what happened? Immediately the market shot up. All right, and then it went to the high, went to KTR +2, and then stopped there. So okay, so this is what exactly happened yesterday on the US Dow Jones, following the TWB system. And gold also did the same thing. KSI is green, so it's favoring a buy. So that's why gold yesterday go higher. So gold from the very beginning, it was at OP first, okay, and then it's ding dong, ding dong, ding dong, ding dong. Then after that, it tried to pass the pivot one, it failed, and when it failed, CCYR, it came down. But you notice again, the KSI is green in color, and the boys came in to buy instead. And of course, after that itself, as you can see, the market went all the way up. So that is the whole thing here itself. What's my view for the Dow next week? I will talk about that after you finish the MAO, okay? And y'all will get to feel what I'm trying to say already. All right. Okay, okay. So that is what happened to the US, to do a recap of what happened in the last 2 days. Okay, now we do a bit more news-oriented stuff, okay? Now, major city, okay, which is the Xi'an, locks down to control COVID outbreak. So Xi'an, a city of 13 million people in the central of China, entered a lockdown on Thursday, which is yesterday, as authorities rushed to control a flare-up of 140 cases in less than 2 weeks. Okay. Now, of course, there's also the problem is the hemorrhage fever cases. There's a high mortality disease transmitted by rodent. But the problem is that, right, the thing is this, okay, there's something that I caught it from internet, okay, not from the mainstream media. Apparently, this guy, apparently a jogger, in fact, went to the park to jog. But after that itself, right, apparently he also got this hemorrhage fever case. But the thing is this, he didn't get bitten by any rodent. Okay, he didn't get, and he just went to the park. Now this thing itself, right, this fever case usually has only passed down through the rodents, all right? But apparently, right, the guy who got it, he didn't get bitten. So this is very interesting. So that's why things get a bit scary now in China. You can see that the queues in the people in the what they put in university, and everybody is like now all preparing and stuff like that. And of course, you can see that now every household can only send one person out every 2 days to buy grocery. Okay, the buy grocery. Yes, it's very scary, undeniable itself. It's pretty scary. Indeed, let's put some love there itself. Yeah. Yeah, let's put some love there itself, okay? Because it's really scary. I got more to share with you later. And of course, that created business, theaters, all to shut down, obviously, right? And school all shut down and move to online. So the thing is this, okay? The thing is this is what we can see on the mainstream media. But we realize that, right, we don't really see much coverage, okay? Now, here put a very interesting thing. Here put there, Xi'an accounts for just under 1% of China's GDP, according to official data. And of course, in this Xi'an, right, is the place where electronic giant Samsung, chip maker Micron, and all those manufacturing centers are in. All right. In fact, itself, Xi'an actually is a very big, important place. So you think about this: if Samsung is there, chip maker Micron is there, how can the GDP be 1%? So I don't really believe in that itself. So I began to look into more detail. That's why this morning, this MAU took me 5 hours. Yes, 5 hours just to finish it. Okay, so this is what I get from an alternate market news. Okay, alternate, which don't really find that. So the scary part is that, okay, like I say, people have to, those conspiracy theorists, they have to put it there in Wuhan. It happened in 2020, first in January. That was what happened in January. But the scary part is this: it happened on the 23rd. Okay, and it happened in the morning. In fact, in this case, it's morning. All right, so it's 2020, 23rd. Now, after 23 months, now we have the December 23rd again, okay? And it's happening again. And this time now it happened in the evening. And apparently it seems like 10 p.m. Oh my goodness. All right. Find it very fun, very eerily coincidence. Well, this is what's happening in China right now. Very interesting. All right. Of course, you don't see this sort of comparison in mainstream media. Okay, not to freak people out. Now, the thing is this: when I check on the Xi'an GDP, right? No, Xi'an GDP is one of the highest in the market because that is where all the big boys reside their factories in. So in fact, itself, right, from the non-mainstream media, but China publication, it shows that the GDP is 5.2%. It's not 1% at all. So it does have a bit of effect on the China market. And of course, you can see now, immediately people went crazy because it's understandable, panic, all came in. Everybody rushed in to buy food stuff from it. Okay, this is not the part. I mean, going to NTUC to buy food stuff, we always see that it's Singapore, right? But this one, next one, you're going to be stunned. Okay. Wow, look at it. People are really running away. They are really running away. They pray open those gates and whatever they need to do and just get out. Because they know that what will likely be happening, they couldn't take it, they must run. So this is what really happening in China. But again, you do not see this in mainstream media. Of course, they won't dare to show you all this. But if you actually do some detailed watching in from those, especially those from Taiwan side itself, right, you get to see all this pretty scary, yeah? So of course, Singapore also reacted by suspending all the new ticket sales for quarantine-free travel starting from Thursday. And obviously, the reason is pretty clear that we have more and more Omicron cases in Singapore, and the majority of them are from the import side itself. So of course, there are people who are being asked to go, particularly young kids, to go for their vaccination jab. So I have my own reservation. I'll see how it goes. But that's the note itself, right? This is again repeating what happened back in the last year itself during the Wuhan virus thingy. Yeah. All right. So those are those local and global news, and those are not really that important unless you want to look details. But let's look into some important market information first. Now, oops, sorry, there's a bit of PowerPoint issue on here. Now, one thing is that I've been telling people, how do we trade the Wall Street? I already tell you guys, so one of the easiest way to trade is simple. When the Wall Street asks you to sell, but the market don't go down, it's time to buy. Similarly, if the Wall Street say it's time to buy and the market doesn't go any higher, it's time to sell. So let's go back again on Monday, which is like 4 days ago. Electric vehicle stocks tumble over Mushkin reject Biden climate and social plan. So again, on a lot of mainstream media, everybody was telling you that don't buy EV anymore. EV will be down. EV stocks will go down. Blah 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 blah. What did I tell you guys? Those who were online with me, what did I tell you? If the market asks you to sell or infer you to sell, but the market price doesn't go down, what did I tell you? So can you write for me? What did I say about EV? Yes, Chongming. Wow, very fast, Chongming. Yes, indeed. I did say that it's time to look for a buy. So Chongming, since you're so fast with your reply, I will also give you 2.88 ADA coin. Okay, Chongming, I'm gonna give it to you now. 2.88 ADA coin. Thank you for all the support that you've been giving to us. Okay, 2.88 ADA coin will be on your way next week. Yeah, 2.88 ADA coin. All right. Okay, so take note of that, Susan. Take note of that. You're online right now, right? You bought Neo. You bought, what do you write again? You bought Neo, small. Okay, pretty cool. Yeah. Stanley all say can buy. Buy on dip. I say that. Yeah. Okay, so fantastic. So what happened? Take a look, guys. On the 21st of December, the next day, when the news came out, right? 21st actually is the 21st MAO was because I used 20th CNBC right up, right? So actually it's the same day. So when I saw that as well, I say no, stand by on electric vehicle stock. I say that it's time to look for buy. And of course, what happened? I gave you one of the prominent one, like example, Tesla. I told you, right, Tesla will bottom out soon. I gave you a very clear indication. I told you that the price will hit about 898 to 878. Then look at for it to buy, and I give you a target 994. Okay, I gave an immediate target of 994. So it's $100 call. Okay, $100 is not bad, right? It's already 12%. So look at it. Look at Tesla. Oh my goodness, it really came down to about 880 level. And then after that, it went all the way up to 1067. So it basically hit my target within 2 days. So guys, this is how we trade the market. When everybody is selling the market, look at it carefully. Be patient, observe, and see the situation. Now, if the market call for sell and the market continue to sell, yes, sell. If the market call you to buy and the market is buying, you buy. Now, that only takes about 20% of the time. But the majority of the time is when the market asks you to sell and the price doesn't move downwards, that means that something is wrong. Look out for the turning point, and usually you'll be right by buying. So vice versa, okay, vice versa. And of course, yes, indeed, I was spot on my Tesla. Okay, so guys, please key on for me again, spot on Tesla for me, yeah. Okay, really, it was spot on because, yeah, I gave you exact level. And of course, I know that people like Alex, hey, all right, yeah, okay, you actually make money from there itself by buying into Tesla. Easily a good Christmas, right? I think you made about $200 just by listening to what I say and make money. Thank you very much. Okay, thank you, Dennis. Thank you, Terry. Thank you, Chongming. Thank you once again. And of course, oops, what did I do? Okay, I think again. So of course, what happened now? They are telling you, okay, they're telling you right now, okay, EV stocks saw on hype in 2021. So see, 4 days ago, they tell you that the EV stock is down, blah, 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 blah. Now, after today, this morning, they say that no, stocks are up already. It's good to buy. It's good to be there. And of course, they tell you that Rivian is good because why? Even though he's only had 11 vehicles for the third quarter, only a revenue 1 million, but the company itself have raised up IPO, my goodness, $13.7 billion. A company that has a revenue, not even net earning, a revenue of 1 million has taken in from IPO $13.7 billion. Oh my goodness. And the market cap right now is 87 billion. Oh my God. Don't you realize that this is how the whole capitalization works out in the world? And of course,
The reason is because they're going to agree to provide Amazon with 100,000 vans and stuff like that. Yeah, all this thing. Now, Lucid is another electric sender market. Now, this company itself, right, Air Pure, they're going to have this car. And of course, same thing itself, right? Seemingly, there are people looking at that. So with that itself, let's take a look in the stocks wise. Okay, let's take a look at the stocks. Okay. There we go. Okay, so first of all, what's my view on Tesla? Now, Tesla has already went up. Yeah, Tesla has already went up. Okay, Tesla has already went up, and you can see very clearly that Tesla now is likely going to challenge the level that I mentioned previously. That level is 1118. Okay, 1118. This is the level that Tesla could be going for based on the conventional chart. But you can see that this is the technical of the triangle, and of course that's why Tesla break out yesterday. Now that is based on that, and if you look at my TWB chart, let's go on, let's bring it in. All right, you can see that Tesla on the Tesla itself, right? We can see that momentum wise is basically still a lot of selling pressure. So people are actually taking profits on the way up. At the moment now itself, right, Tesla should be able to go and touch the 1100 level. Yeah, that's what I'm looking at. But of course, 1067 was kind of strongly resisted by our TWB system. So watch out for 106752 because yesterday closed at 1066. So the resistance is remaining being triggered. So if the market can crack above 1067, it should be able to go up to the next level, and that's about 1098. Okay. But of course, if the market really gets resisted over here, then the pullback will be back down again, okay, to about 1020 area. Okay, that's for Tesla. Now, how about Rivian or NIO? I'll do that shortly. Wait a moment. Okay. Okay, so I told you that NIO is a buy at about $28.32. I mentioned that on Monday. And then, of course, what happened to NIO? NIO went up. Yes, indeed. It's up to $30 already. So you buy at $28.50. Now it's at $30.52. So up $2. Apparently, it's about nearly 8%, right? So again, that shows you why you have to believe in your technical. And of course, this guy, the Wall Street guys, they are real badass people. Yeah, they ask you to look, they just for you to sell, and if you're sold down, the price goes up, you'll be like, oh my god. Okay, so how high will NIO go will be the question you're going to ask me, right? I think the highest it can go is to cover this gap here itself, and this gap is probably about $33. Okay, $33 and about probably 30 cents around there. Okay, for NIO itself, right, yesterday created a BNB. If you take a look, so you do the two lines there. If the market can stay above the upper line, of course, $33.30 should be not a problem. Now, if the market pulls back, then be very careful, yeah, because it could be a dead cat bounce. So traders, be very careful on that. Okay, that's for NIO. And how about our Rivian? Now, Rivian, I already tell you how to work around it itself, right? Rivian, as I told you guys, as long as Rivian cannot stay above the closing price of the IPO day, it cannot stay above, this stock is still going to be down. And you can see that even though Tesla, NIO all went up, right? But you can see this counter, although it bottomed out a little bit, but it's nothing fantastic. So it has to cross $100.73 for it to find upside potential. Of course, for those who are much more risk taker, they can consider buying right now and hope that it will go higher. So everybody got their own strategy. As long as you know what to do, that's most important. Yeah. Okay, so that is the Rivian, NIO, and Tesla. Hopefully you like my analysis. Okay.
So the thing is this, Wall Street now has came out, okay? The crystal ball is out. So Chong-Ming, you asked me about my views on the Dow Jones. How about I give you the views of the Wall Street guys for 2022, okay? The news, the latest data. So Oppenheimer, okay, BMO, Wells Fargo, Credit Suisse, all of them are looking at very high figure. Look at it. They're all looking at 5,002 to 5,330 for next year itself. It seems like next year must be a very good year, okay? Goldman Sachs is 5,001, okay? RBC 50, Gold JP Morgan Chase about the same level. Then of course, majority of them are all at a higher level because now it's about 4,700. So a majority of the Wall Street guys are all very bullish for next year, okay? But of course, very interestingly, the one that's opposite the trend is from Morgan Stanley, Mike Wilson. Now, Mike Wilson and Stanley's projected earnings per share for S&P 500 is actually much higher than other firms. So what is happening right now is that even though the earning per share projection is high for this Mike Wilson, right, he says that the 2022 will finally bring the multiple compression which we incorrectly forecasted. Our 12-month P ratio is 18 times, is 15% below current value. And in line with the 5 years average and the top quintile of the past 30 years, he felt that, right, the market is really at an overbought region. But the thing is, there's only one Mike Wilson says that, but the remaining of his competitors and friends, all of them are saying the other way. So what do you think, guys? How many of you think that the S&P 500 will be up versus it will be down the next 3 months? Please answer right now. For the next 3 months, in January, February, March, what do you think? Will the market be up or will the market be down for the next 3 months? Please, everybody, those online right now, 44 of you, would you mind want to share with us what do you think should be happening in the next 3 months, up or down? Wow, okay, Dennis is very concise. He says that up until February, okay. Kim Lai say up, Chong-Ming up, up, up. So very good, Chong-Ming is very bullish. Jerry, you're down, okay. Janet up, Karine up, Terry down, Eric Hua up. Okay, so we have more ups than down, yeah? Okay, cool, okay. So everybody is entitled their own personal view itself. Okay, I'll share with you more my view later. All right, so now we're going to go into our special Christmas edition, whereby I'm going to share with you some very heavy economics figures. All right, some of it may actually cause a bit of like headache. So get your aspirin ready, water ready. All right, we're going to do this special edition. Okay, guys, are you ready? Okay, so Liu says that we're up till April seasonal. Okay, I'll be talking about seasonal pattern too. Let's take a look. Okay, so first of all, I think I forgot to do some PowerPoint arrangement. Sorry, my bad. Okay, so now first of all, this is the 12 months percentage change on the consumer price index. Okay, now do note this is statistics from 2001. That means 20 years ago. 20 years ago until today, okay, the last time when the CPI data went high, about 5.2%, we got into a recession. But of course, that was the GFC, right? Global financial crisis. So it's not too sure whether is that going to be implemented, is there really a cause of it? Then, of course, when the market is selling down, the CPI data dropped quite badly. And that was whereby the market actually bottomed out and went up again. So it seems that the CPI is still a very important instrument for people to watch out for a bullish run. Okay, so now fast forward the tape in 2019, we had the shortest ever recession. And now, incredibly, our inflation data is about 6.8. Now, do note that this is not from anywhere. I draw it myself. This is actually from the US Bureau of Labor Statistics, and it's from Bureau of Economic Research. So all these things itself is not because I just anyhow plug and play, all right? It's very from big organization. And of course, what happened? Jerome Powell says that this inflation is very frustrating and he said it could last until next year, right? That's what this Jerome Powell say. So people like this guy, okay, hold on, I need to arrange the PowerPoint slide a bit lost already. Wait, oops, still not there. Oops. Okay. Oh yeah. I think there's some PowerPoint issue. Okay, never mind. Just trying to arrange from here. Okay. Try again. Okay, here we go. Now, Bill Ackman, okay, recently, right, in October, he says that he gave a presentation to the Federal Reserve Bank of New York. And then after that, he says that the bottom line is simple. He thinks that Federal Reserve should taper immediately and begin raising interest rate, okay? All right, and of course, what happened is that he gave his reason for that. Okay, just give me a moment. I'm so sorry for the PowerPoint running around. Sorry about that. Yeah. Now, what the reason he gave is that the economy has made substantial progress towards the federal employment. And of course, the main thing is this is $5.1 trillion worth of stimulus since the beginning of the pandemic. And this is really unparalleled level for economic stimulus. And this is going to be real worrisome. And of course, federal fund rate is a historical low level. So the wait and see approach is raising interest rate creates significant risk even to the substantial progress to date. Okay, so in short itself, he's trying to say that you continue to put in so much money, although the economy may be going up, but it's not real. So in fact, that's how he summarized that. So what happened to inflation? When inflation is in the house, look at how crazy, look at it. The European natural gas is exploding higher to record level. Look at the way it went up. Now, US crude is still reasonable, right? WTI crude is still okay, but look at UK gas and and EU gas. Oh my goodness, look at the way it's shooting up. And that's why I felt that the biggest problem this time around could come from Europe and not China. But nonetheless itself, right, more important, look at it, this from Netherlands, look at it, the thing, oh my God, look at it, how it exploded in just the last 5 months. From 10, which is a very high figure already for natural gas, it went up to almost 55. Oh my goodness. This will definitely going to hit the bottom line very badly. And I can be sure that, right, if you look back in the tape, in 97 was Asia financial crisis. In 07, it's US crisis. Of course, the one that's unscathed for the last 20, 30 years is the European side. So I kind of figure that, right, there is a good chance that Europe might be hit. Now, of course, the thing is this, people have been saying that bonds are stupid to buy. In fact, this Ray Dalio, he's the chairman of his fund, and of course, this is the power fund, which is one of the top 10. But he is saying that, right, buying bonds is stupid. He felt that the bond market is in a bubble, and he felt that, right, the market is going to sell the bonds. Now, we've been hearing this for the longest of time, and even this guy, Michael Burry, also says that he don't short cryptocurrency. He felt that, right, the one thing to short is actually the 30 years treasury yields. Okay, 30 treasury bonds. So what happened is that now let's take a look at the reality part of itself. Now, if you say inflation is about 10%, the real adjusted figure, and if your bond pay you 1.4%, then naturally you are down by 8.7%. So who the hell will actually want to put in the bonds? Because the real interest rate, the environment itself doesn't even hold water. Okay, so that is the view of every people that we all know, right? Everybody says sell the bonds, buy the equities and stuff like that. Okay, this one we understand. But if you look carefully at the chart again, this is where I want to take a look objectively. Now, this is the ETF, okay, ETF that basically reads the bonds market. Now you can see that back in 2020 January. Now, the reason why the bond price shoot up was because everybody was very concerned of the world economy, and obviously so that they rather get a very small dividend, okay, the yield versus putting money in stock market. So when the stock market was crashing down itself, the bond price shoot up. Okay, so this one you understand now? When the stock market in January, February, March, April until September, when the market was down, the bonds market goes up. Yeah? And the bonds market goes up, the yield goes down very badly, right? Obviously, yeah? Okay, so all clear. Then, now, can you tell me in your own perception, okay? Based on the last few months, and look at the chart yourself. If I do not tell you that this is actually a bond chart, what do you think from the schematic of the charts right now over here? What do you think? Do you think that the market is going to go up or the market is going to go down? All right, let me have your answer right now. Let me see what's your view. All right, then from there you can hear my view too. All right, so this is the bond ETF. Okay, let me know. What do you think, guys? Key your answer right now. Okay, Dennis, he says that it will be up. Okay. Allison says up. Kim Lai up. Stanley up. Karine, you're higher low, higher high. So up, I assume that. Chongming up. Janet up. Eric Hua also up. Okay. All right. Only Liu says down. Okay. So the thing is this chart. Okay, this chart is the key to everything. Okay, now from the chart view, it is more of going up, right? In my personal perspective, okay? But of course, the fundamental where everybody, especially the boys like Jerome, I mean like this Ray Dalio, okay, Michael Burry, they are short. Yeah, even Bill Ackman are short. So all of them wants the bond price to drop. They want the yields to go up. But the chart itself, right, no matter how I look at it, I cannot see why can this chart be down. So that's the reason why I want you guys to help me on this, okay, to see whether I get it correct or wrong. Now, this is the chart that I just showed to you earlier. Okay, let me just show you how I get my lines into it. So I get the recent high, okay, and then I drag it to the recent low, and I do the Fibonacci retracement, okay, and you can see that when this is A, this is B. So when A goes up, incredibly, the angle, okay, which is here, hits C. And of course, when it hits C, and when it came back down, the market reads it as if that they know where it's going to go. So the question is this, the charts, in my opinion, look set because he actually stayed at 61.8 and he stopped there itself, right? So which means that in any circumstances, if the market is to stay up itself, this should be able to bring it up to around this price. All right, and that's about 23% yield. Okay, but the point is this, but all the big boys are calling for sell. So I'm not too sure how do you interpret what I just shared versus what the boys have just said. Okay, it's something to take note of. Okay, think about it. Now, this is the S&P 500 versus the gold market. Now, you can take a look itself, right? I'm going to cover everything in the world, so you to follow me, right? Okay, so if the S&P 500 is so bullish, what will happen to gold, right? Apparently, when S&P is actually sideways, gold usually will have to move a little bit already. So you can see over here itself, the S&P 500 was sideways back in 1970s before I bought. The gold price actually goes up. Yeah, the gold price actually goes up. So it seems that whenever the market is sideways or down, usually gold will go up later. So of course, the same thing happened again back in 2020, where the market was sideways for gold. And then after that, what happened to gold? The gold shoot up, okay? It shoot up all the way. So it seems that whenever the market consolidate and stuff like that, gold will always be the next thing that come in line. And of course, trading can be pretty simple, okay? So this is the S&P versus the gold market, yeah? So we put them together as well, right? Put them all together. I put the gold and the Dow Jones and gold, the two index, and then I put them side by side to come out a ratio. I noticed a very incredible phenomenon. In 1968, there is a peak over here for this Dow gold ratio. And then incredibly, it saw all the way down to this point here in 1997. And then obviously, we all know what this Alex Greenspan did, okay? And then after that, you can see that the gold and the Dow went all the way up itself, right? So what happened was that not necessarily the stock market, the stock market up, it can be because of the gold going up. That's why the ratio moved, okay? Now, what is really crazy is the recent one is out in 2009 to 2010. It stopped there again, and then that instigated the Dow Jones to go all the way up, so which means, right? Okay, so the thing is this, okay, the thing is this. What I'm trying to say
is that if that is history, it's going to repeat itself, then there is a chance that the Dow and gold, this index can go higher, and that's about 32 level. So the question is, how can it be? Well, the only thing that this will happen is that the gold price shoot up very fast, or the Dow Jones come off very, very fast, okay, or the gold maintain. So take note of that. This is the first special chart I'll share with you for today. Now, of course, this is the main thing, is that you must understand that Federal Reserve, how it works, right? Now, when Federal Reserve now, they have already do the tapering, that's to reduce the easy monetary policy. Then after that, right, they might be forced to actually hike interest rate. Now, of course, you can see from this particular chart from all the way from Bank of America, shows that every federal tightening cycle always ends in a crisis. So they're different. When Federal Reserve tighten only, the market almost instantaneously reminded the Federal Reserve. Yeah, because you're talking about big companies, right? From this 87 stock market crash all the way to the Asia financial crisis and stuff like that. This is a very, very, very interesting thing to watch out for. Gold seasonal December and January, very good. Yeah, okay, I'll talk about gold and Dow seasonal pattern very shortly. All right. So this is the thing that you must understand. Whenever and the thing comes in, they're going to do any form of this easy monetary policy or hiking interest rate. That's always the big problem. Yeah. And of course, take a look, guys, from where we're looking at right now for the medium and average time for the next recession. It's about 37 months from where we are right now. So today is 2021, so 37 months or 2 years plus, in my opinion. 2024, we should see something very terrible, and that's time we're going to affect everybody. But then for us at the moment now, right, we just have to bear with it and then look at it. So we are still not at the bear market cycle yet, because the Fed fund rate isn't that at the level that we will know that it's a sell. So just continue to buy if it's necessary. Yeah. Now, the reason why I'm very concerned, because you can see once again, this is the S&P 500 chart, the one in red. Okay, and the one in blue is the total asset that's being pumped into the system, right? All the bonds buying. So you look at it, right, for last how many months? Okay, every time whenever the market is going up, the one in red is going up, right? You notice that the Fed funds are all following through itself. It's literally following through. And even recently, when it pulled back, right, the Fed fund also came off, right? This is what it means, again, that the market is actually hold up by the funds, not the equity market. And of course, if you look at it a longer period of time, you can see that the blue line shows that the competitors versus the S&P 500, and they move rather in tandem. So this gives me a very good feel that, right, maybe itself, right, okay, there is a lot of people who are actually getting it wrong. Yep. So this is what happened in terms of the Fed. Now, what is scary now, you can see that is the Wilshire 5,000 to GDP ratio, and this is the total value of all publicly traded stocks versus the GDP ratio, and really crazy that usually about 150% to 100, we are already at a very, very peak level. We should be very careful. But of course, what happened to the US Dow Jones? Oh my goodness, let's take a look at the US Dow Jones right now. Oh, yeah. The US Dow Jones now is still trading higher at 35,950. All right, 950. So you can see that, right, when the Dow and the the Dow Jones and the 07, right, the highs are already so far apart, right, and they basically, you know, have this type of thingy. But now what we have is that the current valuation now is at least at 200%. That means that everything you're buying right now, you're paying double for whatever you've been buying previously. And of course, you can't get any better than this. So traders, be very, very careful, because when the market peaks only, right, the selling will be for a couple of years. Okay. So of course, this is the Fed fund versus the S&P 500. As you can see, once again, interest rate hiking is not a bad thing. In fact, when interest rate hike, right, the stock prices still go up because bank shares still profit from that. It's the before the starting from there, which is now the holiday period, is where you should be prepared. So you can see over here, the whole chart shows very clearly that okay. It shows that, right, when the Federal Reserve actually in hiking, the market is okay. It's only when it stops hiking, it's all right, then things get very nasty and messy. Yeah.
All right, so for here itself, right, with Federal Reserve on deck to start to tighten the monetary policy, there's significant risk that the buybacks will be slow. And because of that itself, right, here are the significant headwinds, okay, that might be happening for 2022. Tightened monetary policy, high valuation, that's definitely a very big concern. Then less liquidity moving around as central bank do QE. Then of course we have the high metal price, because the metal price with more inflation, definitely that will reduce consumption, and weaker economic growth, weak consumer confidence, flattening yield curve, weakened earnings growth, and weak smaller profit margin, and of course comparison. So all these are the headwinds that are going to be happening, and people using it as a form of guidance, right? So this is why I say that if you ask me, it's all right. All these reasons can really bring down the Dow Jones further. But again, if you look at it, right, then the significant, look at it, the buyback. The buyback is incredible, the buyback. Now, why will suddenly everybody buy back? Because they know that Federal Reserve is going to stop the water, okay? So the water source is going to be stopped. So whatever they can borrow right now, they quickly borrow. So a lot of them start to borrow money and then go and buy their own stock to push it higher and looks good. And of course, later on, they will take action on the options and they profit from there itself. So you can see that the corporate came in, wow, 33 billion worth of this US stocks on their own. So all these come from the Bank of America Global Research, not from any Tom, Dick, Harry. And this tell you that the corporates are actually buying as compared to the retail. As usual, retail is still waiting and waiting. Yeah. Okay, so the thing is this, the problem with now people are very concerned is the Omicron, right? And we all know that one gentleman said this in the TED event, and the guy is Bill Gates. And Bill Gates now is one of, if not the richest farmland owner, definitely. And he is definitely also pretty well known, because he forecasted that something like a COVID-19 happen in the next 4 to 5 years. So now Bill Gates, out of nowhere, on 2 years ago, decided to take some part. He says that now we are entering the worst part of the pandemic. And he says that because of that, he canceled many of his holiday plans. And he feels that, right, Omicron is spreading faster than any virus in the world or history. It will definitely be hitting every country. So you may thought that this is, wow, Bill Gates has turned bearish and stuff. But no, he says that because Omicron moved in so quickly, it's likely to be staying in our country for at least just 3 months. And after that itself, right, we can just let it go, because usually that's the case. So basically for Bill Gates, he's confident that within the next 3 to 5 months, there is a chance that the COVID-19 will be over. And it happened to strike a chord with a lot of few people in the market, and including myself. Yeah. Okay, so Bill Gates is saying this. Why? Because you can see the chart that's very scary. Look at it. This is the coronavirus chart over the last 2 years. And you can see that, right? Okay, wow, very scary. So it seems that, right, if the chart is to behave itself and behave exactly the same, then are we going to see the same numbers happening based on this reading here itself? So that is the first concern that everybody has, and pretty panicking on the current Omicron seriousness. Now, of course, you can see that loads of funds buy in. Why? Because January, as you say, correct, Liu and Dennis, in January is always a very good time to see a lot of funds coming in. And this one is the 134% of flows coming in. Okay, all the wealth manager, Roche trader and stuff all coming in. And they're saying that, right, there'll be more. Even Goldman Sachs says that there were $125 billion coming into the system. So that's the reason why this current now in December is very hard to go down, because everybody's using large drop of money to buy this, buy that. And that is where it concreted the whole problem. But again, this is how it works in life. And of course, majority of the stocks now are actually trading, okay. Where is it? Okay, the one in blue shows the 50-day MA. So the one in green, extreme optimism, the red, okay, SPY. Yeah. So what I'm trying to say is this now, right? The stocks are now very low numbers that's above the 50-day average. So what he's trying to say is that if, let's say, at any one time they actually found, okay, something, all right, in the market, that will be good. But on the flip note now, because there are so many stocks that are below the MA 50, sorry, some are saying that if this stocks actually recovers, this is going to bring the index all the way up. So both sides of the coin. People who see this chart say that, okay,
that there's so many stocks it's not that high. So if they recover, S&P will go higher, right? That's one way to look at it. On the other way, the negative side say, look, the stock market is going up every other day, but yet the market breadth is so low. That means that the market may crack. So again, two different camps, two different views. To me, they're both of them correct. Yeah. So the seasonal pattern that I got for you guys, take a look. Seasonal pattern, take a look. This is the 1985 until now, and seasonal pattern shows that usually in December, the early part of December, there'll be some profit taking, which we saw already, and then after that you will recover. Whether it's NASDAQ, S&P 500, or this, okay, it's the same. Okay, so all of them shows that itself. So next time you know, right, about this July period, take some, be careful, because that's the time whereby the market will pull back a little bit. But after that itself, right, it will rally. And of course, in the January period to the April period, it's usually the significant up rally, right? But whether this year will it be happening, we don't know. But you can see that this is a S&P 500 seasonal pattern. And of course, once again, this is double confirmation that the first few months will be okay. All right, but the thing is this, in January, do expect some profit taking to happen. Then there'll be ding dong. And then from April, that's where it should recover. So different people have different views on the seasonal pattern. For Larry William, it's more on the bullish side. For this one from the equityclock.com, it's showing the negative side. So I don't know how to read this already. All right, so definitely itself, right? This is the, we all know that the fear and greed index, so this is not updated, yeah? So I'll let you all know later on. So from there itself, right, okay, my view is that, okay, this is the chart view right now that I think you guys want me to share and talk about. So my view is this, look at the Dow Jones, in my opinion, the Dow Jones should be able to trade a little bit higher, and the figure I'm watching is at 36,100 level, because this is my KTL line that's auto drawn by the system, and I believe that the market here will present a strong resistance, because it resisted once, it should try again at 36,100. Now, if the market can stay up itself, right, this will bring it all the way to all-time high. Yes, it will go to all-time high this round, and all-time high is just not too far away. Yeah, all-time high is trading at about 36,557. Okay, so my view for Dow is up the next week if you can cross my KTL target level. All right, for gold, let's look at gold. Now, gold on a day chart, you can see very clearly. Let me just change it to gold. Now, gold is moving nicely, and it has break above the new cash RL. The new cash RL is 1804, 1804. So which means that if the market can stay above 1804, then of course the upside can be as much as, oh yeah, $1840, yeah, 1840. That's my TSCB figure, 1840. So for gold, as long as it stays up, it should be able to go to 1840 very easily the next 2 days, which is like Monday and Tuesday. Okay, so I've given you my views, and I tell you guys about my thing about this whole entire market itself. Seasonal pattern is definitely pretty bullish for the indices and other markets. But in terms of the current situation in China, and of course the overpriced level for this global market, all these will be the dampener. So if you're going to ask me, right, I kind of, in my opinion, my own opinion, we should see some upside. Yes, we saw already. There might be some pullback on next week itself, a bit of pullback. Then after that, probably in early January, it recovers again. Then by February, in my opinion, there will be some selling. Yeah, so this is my rough gauge itself, and I hope that you enjoy today's MAO. I say, although it's not too long, but it took me quite a bit of time to gather all these pictures and numbers and statistics for you. I sincerely hope you like it. And of course, once again, like I say, guys, the market, we don't need to forecast or predict. We just follow through the chart and we make money from the market. All right. All right. Once again, thank you guys for today. Merry Christmas, and I wish you all the best. I will see you guys again on Monday. This is Cal signing off. Bye-bye.